What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Amazon. Amazon reported their numbers for the first quarter of fiscal year 23 after the markets closed. And it was incredibly volatile, so it actually rallied a little bit over 10% to $123, $124 per share. And of course, ended up selling right back down over 14% selling pressure after hours to bring us back down to 102, 103 around those levels. So again, hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. Again, only a few more days left. If you want to take advantage of that 16% discount, get access to all the buy and sell alerts, options alerts, trade ideas, market videos, private videos, and private live streams for 3 days a week that we're doing Monday, Wednesday, Friday for all the members as well. So link's going to be down below. So this right here was a price action on Amazon. We're seeing a lot of consolidation sideways. Again, you can see on the 5-minute chart that we actually did rally as much as $123. This was a jump of 11% on Amazon. And then immediately once Brian Olszewski and Andy Jassy talking a little bit more about the future and the guidance, the stock pretty much ended up selling off over 14%. So on a net basis, we didn't really see much of a change, and futures right now are very, very flat at the moment. So EPS came in at 31 cents per share, which was much better than the consensus of 21 cents per share. And revenue also with a very strong beat here, $127.4 billion versus $124.5 billion expected. And this is also a growth of about 9% on a year-over-year basis for revenue. We'll talk about that later in the video. Now, Amazon Web Services also growing, but not at the same rate as before, to $21.3 billion versus $21.2 billion expected. And advertising came in at $9.5 billion versus $9.1 billion expected. Advertising with a very, very robust growth for Amazon. So AWS, which is Amazon Web Services, rose about 16% in the first quarter to $21.3 billion, which was obviously above the consensus estimates here and still marking a deceleration from 20% growth that we saw in the previous quarter. And, they mentioned that companies have been trimming their cloud spend in recent months amid a challenging economic environment. And finance chief Brian warned on the call to the report that clients keep tightening their belts. And he says, and I quote, "As expected, customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions in the first quarter. We are seeing these optimizations continue into the second quarter with April revenue growth rates about 500 basis points. That is 5%. Lower than what we saw in Q1. So that right there was the actual guidance, which wasn't as strong. So they are still guiding for revenue between $127 to $133 billion. That's still an insane amount if you think about it. And that is still better than $129.8 billion expected by analysts. But the second quarter growth estimates that they're going to grow by 5 to 10% from same time last year. And they mentioned that our advertising business continues to deliver robust growth, largely due to an ongoing machine learning investments that help customers see relevant information when they engage with us, which delivers unusually strong results for brands. Now, this right here, the advertising right here, is the only reason why I found Amazon to be very, very, interesting, right, from an investment standpoint. AWS, yes, we know AWS has been around for a long time for Amazon. It's been the big operational profit driver. E-commerce, we already know it's a dominant player in e-commerce, but advertising is fairly new for Amazon. It's not that old of a business. So this was the big growth driver that I was mostly investing in when I was investing in Amazon to begin with. So this I still like to see continued growth. And as I've mentioned and pointed out in my previous videos, that Amazon's advertising is very different than advertising on social media like Meta or Google. And the reason for that is that when people are on Amazon, they're already there with the purpose of actually buying. They've got their credit cards literally right in front of them and already plugged in if they are looking to buy. With Google, with YouTube, with Meta platforms, they're advertising giants, no doubt, but there's these additional layers of friction because you're not there to actually buy things. You're there to consume content, right? Just like watching this video, you're here for an analysis on Amazon. You're here for an update on Amazon, the company and the stock. And if you see an ad for a product, you're very, very less likely to actually go through and buy it. But if you're already on Amazon, you're already surfing the web for products to purchase, whether it's home care, kitchen, healthcare, whatever it is, right? You're on Amazon and you see an advertisement or advertising, brand kind of showing their company, showing their brand, showing their product, you're more likely to actually go through and follow up with that. Because I personally have experienced it myself, right? When I'm on Amazon looking for things, and if I see like a sponsored post or like an ad, I'm more likely to go with that if the reviews are obviously are good. So that's the main reason for the investment in the company in the first place, is because advertising is still pretty underappreciated in my opinion for their business. And we already know that Amazon's been making huge cuts. So, they've so far laid off 76,000 employees or brought their headcount to 1.46 million. And Amazon is laying off 27,000 employees, the largest job cuts in 29-year history for the company. And we know that Andy Jassy is consistently cutting cost for the company. Net income came in at 3.2 billion, which was a little bit better, actually a lot better from a net loss of 3.8 billion same time last year. And operating income came in at 4.77 billion from 3.67 billion same time last year. And of course, a lot of it was based on AWS profitability. And advertising unit continues to hum along with revenue growing at 23% to 9.51 billion. This advertising revenue now is bigger than YouTube, which is, again, crazy to think about. And I think it's only going to get better for Amazon. And advertising was a strong growth during the quarter at 23%, and that is continuing to hold up very well in an environment where perhaps the underlying sales of products is slowing, is what Brian Olszewski also mentioned on the call with reporters. So net sales up 10% year over year, 13% on a foreign exchange basis, $524 billion on a trailing 12 months for the company. And again, $83 billion coming from AWS, 118 coming from international, and 323 coming from North America. Operating income coming in a 30% increase year over year to $4.7 billion. That's compared to $3.6 billion same time last year. And of course, bottom line profitability also improving to $3.1 billion versus a net loss of 3.8 same time last year. So overall, I would say that Amazon reported some pretty good numbers. They are moving in the right direction. And as we have talked about in our previous videos, the focus from Andy Jassy is going to be very much on profitability, right? It's kind of like Jeff Bezos planted the seeds. Jeff Bezos was very much focused on growth, reinvesting in the business and growing it consistently over time, and not being able to, generate those profits because of profits were being sacrificed on the back of this, very strong growth for the company. And you'll notice in the last 20 years, Amazon has not dipped below 15 to 18% growth rate in revenues every single year. Even though the numbers have gotten as big as they are, over $600 billion in revenue, the company still is plugging away with a 16, 20, 25% revenue growth. And of course, in the first quarter, it did slow down because now the focus is a little bit more on profitability because we are under new management. So I think that's where Amazon is headed. And if that profitability starts to come in, if the company becomes more efficient, more cost conscious about where they're spending money, what investments they're making, and at the same time, they're able to capitalize on subscription, advertising, and Prime, and of course, not to mention AWS, I think profitability is going to be the main key driver for Amazon, which obviously makes it even more of a better opportunity for the future, because that's where Wall Street's focus really is. They don't really care about revenue or what investments they're making, but instead they focus and very much care about how much earnings is this company generating, right? So I think that's where the focus is, and we are under, again, new management. And in my opinion, if Amazon does drop after the earnings from today, and if it doesn't continue to pull back a little bit, I would very much be interested in maybe dollar cost averaging a little bit more, buying a little bit more aggressively, or even selling cash secured puts on this stock in the future. But my fair value is going to stay put. I'm not changing that, which was, I believe, in the low 80s for Amazon, even up to getting as much as a low $100, considering the different P multiples and the growth rates that we go with. So right now we are very flat, consolidating sideways. Support level is going to stay put at $103, $104. So this right here is going to be that level to watch. And of course, resistance is going to stay put at close to $114, $115 per share. I would definitely, give Amazon like a 7 out of 10. Beat on EPS, beat on revenue, beat on AWS, beat on advertising, and then guidance was also very much in line with what the expectations were. A little bit of softness in e-commerce, expected considering what the economy is going through, but overall, these are very strong numbers. Operating income and net income all improving and growing on a year-over-year basis. So I would say the numbers were fantastic, and any weakness in Amazon, in my opinion, is going to have the buyers get very excited to take advantage of those deals. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Here's my quick thoughts on Amazon Amazon. And right now it's in a very similar situation than Google, because Google also is consolidating sideways in a range where we've got a double resistance here, 109, support at roughly $101, and Amazon is in an identical situation. Where we got a resistance here at 114 to 115, and a support level staying put at close to $103, $104 per share. So those right there are going to be some levels to watch, and we are now starting to finally break outside of this downtrending channel. We just need to break past 114 in order for Amazon to really see that momentum to the upside and start trading in that higher high, higher low pattern. As always, happy investing. I'll see you all in the next video.